Welcome back to Ferocious Education. This is Ed. Today we're going to be talking about Clover Health, going with the ticker CLOV. Now we did talk about it, but today we have good updates for the due diligence part, technical analysis, and what I think about this one. So without further ado, let's jump right into this one. My last video is in the description below, so Clover Health, let's dive into the latest news here, specifically as well relating towards Clover Health's second quarter of 2021 financial results. So the total revenue here was around $412 million, which is up around 140% year over year. Lives under Clover management nearly doubled from the first quarter to approximately 129,000. Clover Assistant is on track to manage over $1 billion of annualized revenue. So that is important there. Clover took another step in this journey to improve every life in the launch of direct contracting this past quarter. This milestone more than doubled the revenue and nearly doubled lives under Clover Asset Management. Clover Health CEO said, "We have been ambitious for our goals to maintain an aggressive growth trajectory while pursuing the mission to improve every life in the healthcare, now available and affordable to all American seniors regarding health, wealth, or economic status. We're proud of what we've already achieved and look forward to continued progress in the second half of the year." Now, also their CEO talked about the Clover Assistant continues to become a key differentiator which underpins their unique model. The Clover Assistant has approximately 95,000 lives under the management and is one of the places or one of the pace to, or is on the pace to manage over $1 billion of annualized revenue. Most importantly, they believe that the Clover Assistant drives better outcome for their members. Now, in terms of the total revenue here, we're able to see from quarter two 2020, it was $172.1 million. Now it's $412.5 million. Now, the net loss here is what you need to take a look at, because even though it was previously a net income of around $5.4 million, currently this is a net loss of around $317.6 million. So that is massive. Now, the adjusted EBITDA is sitting at negative $138.7 million. That's a big chunk compared to $24.8 million in income last year. The normalized adjusted EBITDA is negative $58.0 million compared to $33.2 million last year. So the part of this one here is I'm just going to read the highlights. So right off, the total revenue increased by $139.7 million. It consisted of $195.4 million in Medicare Advantage premiums and $216.4 million in direct contract revenue. The total lives increased. Their GAAP Medicare Advantage MCR for the quarter was 111% compared to 70.1%, and they do go ahead relating towards the net effect of COVID-19 to their estimates for prior periods of revenue and medical costs was 97% of the quarter compared to 97.5% for 2020. And then they do talk about their financial results for direct contracting will not be finalized until the CMS reconciliation for the year occurs. Now, on another thing here as well, they do talk about salaries and benefits plus general administrative costs for the quarter was around $107.8 million compared to $40.7 million for the second quarter of 2020, an increase of $67.1 million. That's almost 150% increase from the second quarter of 2020. This increase is related primarily due to an increase of stock-based compensation expenses, which is not a cash expense. On another thing here, premium deficiencies reserves expenses was $27.9 million for the second quarter and anticipated of a reverse demand necessary for the remainder of 2021. This is compared to $11.3 million benefit in the second quarter of 2020. Now, their net loss income for the second quarter was $317.6 million compared to $5.4 million of income. This was a result of an impacted by a non-cash loss of $134.5 million relating to a change in the fair value of their public and private placement warrants. And their adjusted EBITDA also, as I mentioned, they say that this is a reflection of the COVID-19 pandemic, which is negative $58 million. Cash and cash equivalent totals around $630.3 million. Some of the Clover Assistant highlights, memberships, quality, and everything in between relating towards the lives grew 222% or 229% year over year, and it's almost managing over $1 billion in annualized revenue. So you're able to see here the quarter 2 2021 normalized MCR and the changes in between. Moving on from there, you're able to see some other charts. But the most importantly is the financial outlook. So for the full year 2021, Clover Health is providing the following guidance commentary. Total revenues are expected to be in the range of $1.4 to $1.5 billion. This reflects an MA revenue of $760 to $790 million and Medicare revenue contracting revenue of around $650 to $700 million. Medicare Advantage membership is expected to be in the range of 68 to 70,000 by December 31st, 2021, a growth rate of around 17 to 21% compared to an end year of 2020. For Medicare Direct Contracting Program, the company expects that the number of aligned beneficiaries to remain roughly flat for the remainder of 2021. Further, the company expects a significant increase in the total aligned beneficiary around January 1st, 2022. When claims aligned for beneficiaries for 2022 becomes alive. Normalized MCR non-GAAP for Medicare Advantage is expected to be in the range of 94 to 97%, and an adjusted operating expense is expected to be around $250 to $270 million. Their adjusted operating expenses as a percentage of the revenue is expected to be between 21 and 22%, and their normalized adjusted EBITDA is expected to be between $250 and $210 million in loss. Now, moving on from there, but before there, if you'd like to see more contents like this, make sure to click that subscribe button on the bottom right corner and leave notifications on. Also, don't forget to drop a like to this video if you enjoyed this video, and the Discord server is in the description below, totally free, and we're not trying to upsell you anything on there. Previously as well, on August 10th, they did mention that the Clover Assistant now supports all FHIR enabled EHRs, and this is relating towards setting a bar into interoperability in healthcare data. Now, describing the first groundbreaking clinical functionality within Clover Assistance made possible by FHR technology. Now, this is more of a technical thing, but basically they said that we knew it was critical to embrace FHIR core standards as we continue to scale rapidly across the United States, because the ease of integration will help bring Clover Assistance to any provider, regardless of the EHR they use. So basically a larger compatibility system. On August 3rd as well, they did mention that Clover Health announced in Florida the partnership with Value H. This is Value H's ACO network will build the foundation of Clover provider growth in the state. And partnership will bring providers onto Clover Assistant platform to increase the value to fee-for-service for Medicare beneficiaries. Now, on another thing here we do want to talk about is institutional buyers. Institutional buyers remain, for the main part, bullish. You're getting to see a lot of stocks here, or a lot of institutions are adding the stock. For instance, prospective advisors added around 1.5 million shares on Friday, Cube Research adding around 168,000. There's hundreds of thousands of shares that were traded back and forth or invested back and forth on Friday. Some of it is mixed. For instance, JP Morgan have added around 26,000 shares. Goldman Sachs seems to be liquidated or closed their call position, so that could be just them taking some money out. And Bank of Montreal liquidated, but again, you're able to see money going both ways, which is a good thing than just seeing it in one direction. On another part, the short float seems to be around 23%, which appears to be the cause of a previous quote-unquote squeeze that happened in around June. So a lot of people are still betting on that, but my own advice is always bet on the fundamentals, not on a short float or a short squeeze. Let's move on towards technical analysis. Now, on the technical analysis part, you're able to see that on the chart itself, you've seen an increase on the 9th, a decrease on the 10th, another one on the 11th, a jump up on the 12th, but decrease down all the way to 8:30, almost 20% in a couple of days, Thursday and Friday. And what you're able to see is more of a sloppy movement on all moving averages. So you're able to see 80x as well, sloppy at 1663. Willing percent R is very close to oversold, meaning there's a lot more selling activity than buying. And the MACD is, the histogram is going up and down on a very small positive scale, and momentum is below zero. On the stochastic fast and stochastic slow, you're able to see as well that it's not really showing you any kind of trend. And on the moving averages, you're expecting this one to trade between 913 on the top and 747 on the bottom. Now, in terms of volumes, you did see a bit of a jump in volumes on Thursday, but nothing significant. Now, on the Fibonacci retracements for supports and resistances, again, the reason why I use this one is because institutionals use it. 1163 seems to be the resistance, 1492, 1758, 2024, 2402, and 2885. The only support here on the Fibonacci scale is 652, although using a price line action, you're able to see that there is a critical support at the 808. Below there, 757. Below there, 706. And then down to around the 6052 level. In terms of resistances, we're able to see 851 as a resistance. And then another one, 880, an important one. And a very important one at the 959. And then from there on, you're able to see it's 1133. And then going to 1241, and then from there on 1422, and then around 1559 going to 1613, and you get to see the rest. Really used to more of a glide towards 2885. Comes to the question to Ed, what do you think about this one? So the biggest part is, yes, revenue looks bullish. It increased significantly. The main part that a lot of people are disappointed on is their net revenue. And I get it. They're trying to expand their entire market presence by investing into that net revenue, and that, into their revenue, and that is actually damaging their net revenue. Being a massive negative on that side really shows you that they're trying to more put in money to get more brand awareness, and that might actually work in the longer term, but in the shorter term, it's not giving you good results. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.